Actually, I learned today that a lot of us are Generation Y or Z or whatever. I'm actually Generation RS, which stands for Rolling Stones. It's a bit old, and it means that I'm old, obviously, but old also means that you gain some experience in life, and that also means that you don't fall for every hype so easily. And if you see my title here, it deals with a word that you will very often hear in the connection with digitalization. I guess you will have guessed what is missing. Does that work? Do I have to point it here? Yeah, okay. So, okay, and I have added a question mark. And I'm going to give you a little bit of a big picture, an aerial view of where I think we stand on this whole issue of disruption and changing of the insurance industry. First of all, I think what is really important is to understand what is really disruptive. Okay, Amazon is disruptive. They have basically and completely changed, the way you go shopping for retail articles. Booking.com is disruptive. Spotify, Apple Music, iTunes, those type of guys are disruptive. They killed basically an entire industry, the record industry, in the way we knew it. And there are more examples like TripAdvisor and Airbnb and YouTube and PayPal and Netflix, etc. Now, if we assume or agree that this is disruptive, then, and this brings me to my next slide, there is really no disruption in the insurance industry so far. There are a couple of, so-called disruptors, such as, as we know, Lemonade, Root, Metromile. We've heard about all of them. But by the end of the day, they are offering a product in a different form and version, maybe as we know it today, but it costs them a lot of money to bring that product to the customer. They're making no money whatsoever. The losses that they have are actually much higher than we see, because a lot of them are carried through reinsurance contracts. And so I think what I'm saying here is that, InsurTech News described this really nicely. They're missing an edge and story so far with respect to gaining a sustainable competitive advantage. And I think that is really an important point. They have to prove that that model is really a disruptive insurance model, or by the end of the day, it is, a couple of years of selling, dollar bills for 90 cents, which is not going to, be a long-term proposition. Now, the other thing that we see is that a lot of sort of highly valued insurtechs, like Policy Bazaar is an example, VFox, etc., they're basically offering a model that is a modernized version of Check24. Now, Check24, when that was brought to the market, I guess you know that from Germany, people couldn't even spell digitalization. They didn't know any of these words. They didn't know what an ecosystem was, or whatever terms we are using today. And basically, they're doing the same thing, and they're now going head-to-head with them, but they're doing this on a sort of higher technological level. And finally, and that's also a very interesting fact. I have to go there. No? Okay. Insurtechs are not really, necessarily seeking to sort of replace insurance companies. At the moment, 61% of the insurtechs that we see are enabling the value chain. So they're basically really sort of just helping insurance companies that have, traditionally lived with very many legacy systems to sort of, have some speedboat solutions, because they cannot afford, or only very few can afford, to sort of rebuild the entire infrastructure. So they're trying to sort of, add something here and there. And, the interesting part to that point is also that only 20 of 655 insurtechs in a global life and health, which is, I got this number from Bain company, are actual carriers. So most of them are not even carriers. So it doesn't really mean that, insurtechs are sort of going to eat your lunch. I guess, but they're going to try to help you to get better. Now, am I saying there will not be disruption? Of course not. There will eventually come disruption into this market, and that disruption could potentially be very big. Namely, when the big players, Amazon, Google, Facebook, Apple, Alibaba, I don't know, whatever, when they enter the insurance space. It is a $6 trillion US market, and it is very big. It's big enough for the tech giants to come in. But they're not doing that yet because they're currently focusing more on banking, payments, Libra, Apple credit card, Google Pay, I mean, whatever, all these kind of things. There will, by the way, also be a side product for their entry into the insurance market. And, when they will come, the playing field will change significantly. There will be new ecosystems coming out. There's no doubt about that. Where, an ecosystem which is kind of an interconnected, set of services that, plays in a certain field, that will sort of, lead to a situation, or might lead to a situation where sort of this entire chain, that we have in the insurance industry will be sort of, put into pieces, and, there will be individual parts that replace what currently is done in one large organization. And that is something that I would also expect to happen, which also will change the picture for insurers drastically. And the last part, that is for me very hard to imagine, but for 25 years or so ago, I couldn't imagine that everybody was looking at a handheld and at a little smartphone. If there is a business model that somebody finds where insurance is actually bought by people, not sold, by people that, have to tell you that you need that product, then I think there could also be, great disruption. But I have no, evidence to see something like that. When that comes, the change will be massive, okay? Because we've heard that before today. These guys, the tech giants, they have a huge advantage, and that is data. But they also have another advantage. They are much, much better than insurance companies in, working with customers. If you look at Apple, Google, whatever, they're really good at that. And so there are two things: data, where we have some, but not enough. They have a lot more. And dealing with customers, which I wouldn't exactly call a core competency of insurance companies. Those two things, they have in abundance. And what does that mean? That means that, there is a very big likelihood that an insurance company as we sort of know it today may not exist anymore. So, there's a lot of things in insurance companies that deal with customers, marketing, press, a lot of things, branding, all these things are not really necessary, because the core competency of an insurance company is underwriting and claims management, and maybe stuff like policy management, policy issuing, etc. And it is possible that through this, those companies will be reduced to this kind of stuff. What you see now is, of course, that some companies like Allianz also, they're hooking up with Microsoft, and of course some of the big ones, they will sort of, get it early and sort of, try to form partnerships. But there will be many companies that are left behind, and I'm not saying will, but there's a good likelihood that this is going to happen. And in this world, also for the distribution systems that we know traditionally, things will be, very bleak. So this is a couple of years away. I wouldn't think that if I'm standing here in 10 years, that this will not have happened. Maybe it's not going to happen in 2 or 3 years, but 5, 7, 10 years, this industry will transform massively. Let's talk about, for a moment, about the insurtechs. InsurTechs at the moment, I think, as I said before, they're helping the traditional players in all the things that we have seen during the day, transforming and optimizing the value chain. We have their new capabilities that they sort of bring into the market. They have all these sort of technological advances, which insurance companies at the moment, they were never asked for that, and they maybe also are not the employer of choice for somebody who is a young and coming tech entrepreneur. Maybe the last thing he wants to work for is an insurance company, which is not really very hip. And therefore, they have to go into this kind of direction. There will be a lot of sort of simplifying buying process, innovating underwriting, and all of those things. And as we see, they're already happening, but there will be more of that. And what we also see is what InsurTechs or sort of new ideas are doing is that they're basically sort of hooking up and partnering with, for example, anybody who sells a product. I mean, if anybody has ever seen a company or heard of a company called Zhong'an in China, they are a company. Let me just give you a little example. And China is, of course, a very big market with hundreds of millions of potential customers. They have basically taken one problem, which was that the Chinese don't trust that they can, when they buy something online, that they can actually return it. And so they added at a very, 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 very marginal cost an insurance product to every sale on the internet, to make sure that if you cannot return your product, you can actually draw on the insurance. And they have built an infrastructure which is only works on very, very, very high numbers of transactions, which bring very, very little premium in. That means you can only do that if you have high automation. But they've basically created something that no other insurance company in the world today, like not even the Allianzes and the AXAs of this world, could do. And this is sort of the last point. What I mean here is like these partnerships where insurance products are added on to something that is sold anyway, and that contains some form of risk that people are worried about when they buy. And that is also something that I think will be coming, and which cannot be covered by existing companies at all. And finally, and that is sort of what my personal vision is, that there, I can definitely sort of, imagine a world where, insurance companies as we have them today cease to exist. Because if you sort of break up the entire, value chain of an insurance company, there's almost everything that they do is replaceable, okay? The capital can come from the capital markets. The sales, the front end can come from Amazon and Google, etc. The underwriting is also going to come from people that have more data than insurance companies have today. And so there's only little things left that insurance companies would maybe, as we know them today, would do. And even there, I think they are challenged, on the claim side and on the underwriting side. So there is something, that, can happen going forward. I'm not saying it is going to happen, but I think this is something that if I was running an insurance company today, that is what I would think about, Am I actually replaceable? And I think there is a possibility that, as we know them today, insurance companies may be replaceable. Now, that was sort of, just a little sort of high-flying thing. What we are really here for is to sort of advertise our little new venture, which is Michael and my venture, which is an accelerator, and you've all heard of accelerators, I guess, so this is my short commercial here. Accelerators are a little bit different than incubators of what we heard just before, as in they are also sort of, involved much more in funding and making sure that, the good ideas, get the oil that is needed for their engines to sort of run also in a couple of years. So we have basically set up something called Beyond Limits. It's very young, and it doesn't have, you know, a lot of clients so far, but we're working on deals, and it really started, you know, from deals to think of that we should do this maybe a bit broader. And the two of us, we have a very, very large network of people in the region. We're focusing exclusively on CEE, and we have the ability to add to every venture that we see in the country, for example in Romania, but also in Poland or in Slovenia or wherever, to add local people, experienced local people to our team. And what we're doing is we're basically, you know, in the old days we would have been probably called business angels. Today it's called accelerator. We're basically helping young people that have, you know, great ideas, hopefully great ideas, to make sure that those great ideas have a chance of, you know, being even bigger, and have, you know, get the funding, get the advice, show them how to operate a company, help them sort of, you know, find clients, partners, etc., etc. So it is basically a consulting business plus. We know from both of our experiences almost everyone in Europe, and we can help them to market, you know, their applications. We have access to you know, private network of what we would call sort of seed stage investors. That is, you know, not venture funds or private equity funds, but that is earlier when, you know, those first rounds after you sort of, you know, come out of your garage and you need the first, you know, 80, 100, 150,000 euros. That is sort of, you know, what I mean with seed stage. But we also have access, you know, then to venture and Series A, B, etc. Investors. I'm personally on the advisory board of a very large private equity fund that is doing nothing but insurtechs. And they have already a couple of really, really interesting investments. I have to say also mostly in the US. By the way, just, you know, to get to that point, the main reason why there are so many insurtechs in the US and so little in Europe is GDPR. That is the main reason, because the Americans are just a bit easier with data and data protection. And when I saw this film about this health company that is, you know, telling employers, you know, what I eat or, you know, how often I sleep, that would be unthinkable. That would be unthinkable here in our world, and therefore, you know, I think we have a couple of years, so I don't know, maybe some changes have to come before something like that can happen. Anyway, and I'm done in a second. So what we are here for, and we're really sort of, you know, spread the word, we're seeking startup people, startup tech founders that are, you know, keen to expand their ideas, that they want to talk, they want to show us what they do, and we will be able to tell them whether we think it has a chance, what is needed, etc., etc. So this is a little bit like there's a, I don't know, a TV show in Germany where these guys sit there and, you know, you can present in front of them, but in a little way it is like that. We're not going to take on, you know, more than 5 to 10 of those companies in our portfolio, but we hope to see 100 or 150. And in the end, those young startup companies should be fairly certain that if we pick them, that they really have a chance. That doesn't mean they're going to be rich, but they really have a chance. So the ultimate vision, and I will stick to that, is to sort of, you know, create something completely new, but first of all, we need the components for it. So since I assume, because this I think here costs 200 euros to join, there's probably not that many startup investors in here, but if you know any, let them know that we exist. So thank you very much.